Hello everyone, welcome back to your channel. I'm in Circuit class, and today, as I told earlier, we are going to continue with the same concept of non-profit organizations, and we are going to take up consumable stocks, locker rent, and preparation of receipts and payment account. The first thing that we are going to start with is consumable stocks. See, the first thing that we need to know is that what exactly these consumable stocks are. These are the items that are maintained and kept in an organization as the current assets. Okay, these are the items which are consumed during the year in the daily operations, day-to-day operations. Not any special item, but general stuff like that can be stationery, that can be medicine for a charitable hospital, that can be bar supplies for a recreational club, and so many similar kind of things. Whatever the items are consumed, whatever the items are consumed during the year, even if we have not paid for them, that means even if they are unpaid, that means even if they are outstanding, they are all included in the consumable stock expenditure and shown on the expenditure side in incomes and expenditures account on the debit side. On what basis? Not on the cash basis, but on accrual basis. Clear? And the opening and closing stocks, as I told, they are considered as the current assets. They are maintained in the balance sheet of the opening and closing dates depending on the kind of value we have. Okay, so just take a small example here. Now please see this. Yeah. Before I start, just tell me one thing. If you have two toffees, just see this. If you have two toffees and your mother gives you 10, how much you have? Yes, you have 12. And then at the end of the day, you are left with 3. That means how much you have consumed, how many toffees you have eaten during the day. Now that is 9. And this is the concept on which this particular illustration and the further whole concept of consumable stock is based. See, we have the opening stock and closing stock given here. Purchased during the year, that means the total purchase stock of the medicines. And then the same 2 toffees plus 10 toffees remaining 3 minus कर देंगे and then you'll get the stock consumed, and that is what we are doing here. See, opening stock minus closing stock plus purchases, you have medicines consumed. See, children, there are 3 variations in consumable stock category. So this is the first one and the basic elementary one. Now here comes the next one. Apart from the opening and closing stock, you have been given some more information, and that is not the purchases, it is amount paid, and opening and closing creditors. What is the creditors? That means the opening and closing unpaid amount for these items. That means the unpaid amount, that is the outstanding amount for these items. The items were purchased, but the payment has not been done. Okay, this is what it is. So the first thing we are given is the opening stock and closing stock and the unpaid, that is the creditors amount. And then the initial thing that is given, amount paid. It is not the total purchase, it is the amount paid for stationery, that is 46,000. So whenever this kind of a thing is given, please remember that shows that it is not the total purchases. For that they are giving you what? They are giving you the creditors, that is the unpaid or the outstanding amount. Okay, so how will we deal with that? See this. The same concept, 2 toffees, 10 toffees, 3 toffees that we talked about. The whole same basic concept is going on. But along with that, we are adjusting these unpaid items. Okay, so see this. 46,000 is the payment made for the stationery stuff. Now, creditors as on opening date, previous year pending amount. Previous year pending amount, does it relate to the current year? No. Okay, why I am asking this? Because we are calculating the amount for current year. So current year amount should be included. Previous year amount or next year amount should not be included. Clear? So previous year outstanding we reduced. Current year outstanding we are going to add here because it relates to the current year. Similarly, now the opening stock, same two topics. Opening stock is 8,000. Reduce the closing stock and you will get the value here, that is 35,000. Now see, in this very same situation, if we add on two more informations, and that will be the other thing which you need to see. Just take a look. This is a very similar question. Same amount paid. Instead of stationery, we have equipment here. Amount paid is 46,000. We have opening and closing stock, opening and closing creditors. Now it is advance. This is what in final accounts class 11 we were used to use, prepaid expenses. So what did we do with the prepaid expenses? We added what? We added the previous year prepaid and reduced the current year prepaid. That means opening prepaid was added, closing prepaid was reduced. The same thing that is going to be done here also. Now see, take a look here. Children, up to this stage, the question is solved in the very same fashion as we did with the previous one. The opening stock and closing stock, and then opening and closing creditors being adjusted to the amount paid. Okay, done here. Now what are we doing there? Opening advance for the equipment. Opening advance, that means previous year we made a payment of this much amount. We made an advance previous year, so it relates to current year. That is what is here. Opening advance. That is what we are adding. And then current year we paid the advance for the next year. So that is what is, yes, that is what is the amount to be reduced. Okay, so we got 37,000 rupees. The balance to be shown on the debit side of incomes and expenditure account. Okay. So now we move to the next item, that is locker rent. Locker rent is a very miscellaneous kind of an income, a revenue nature transaction, and the amount charged by an NPO from its members against the locker facility provided to them. Okay, it is a revenue nature transaction. Receipt payment account, we will record it on the cash basis on the debit side, that is the receipt side. Income expenditures, it goes to the income side. Credit side, on what basis? Accrual basis. Remember that. So whenever we are talking about accrual basis, we are going to adjust the accrued and advance items, whatever are given in the question. Okay, just take a look. It's very similar but very elementary level of questions. These are, they don't in difficulty level they don't go very high. See this, 47,500 is the amount given. Outstanding locker rent. Outstanding means what? Accrued, earned. See, these non-profit organizations, they do not work for profit. So if they receive anything, it is not considered accrued. It is not termed as accrued. Undoubtedly it is accrued, but it is not termed as accrued. It is called outstanding income, just like in outstanding subscriptions. Okay, so we call it outstanding. And rent received in advance. These are two figures given. So now see this. Whatever amount is given, received as in form of cash during the year as per receipt and payment account, 47,500. Now outstanding rent, 14,800. That means what? This date. Previous year outstanding we are receiving this year. Does it relate to current year? No, it relates to the previous year. So we reduced it. Okay. Now see this. 20,000 rupees outstanding. As on which date? 31st March. So we are adding it. Why? Because it relates to current year. Yes. Then previous year we received an advance. See this, 13,000. We received an advance in the previous year. That means it relates to the current year. Okay. So we will add it, and if we received during the current year some advance, that means that's for the next year. So it will not be recorded. So you have the answer here. Okay. Now, children, we come to the most important part of this lecture, that is the receipts and payment account. As we have already talked about in the previous videos, this is a summary of cash flow, all the cash transactions entered into by a non-profit organization during the year. It is a real account. In basic nature is real account. That means debit, what comes in, credit, what goes out. Whatever cash is received goes on the debit side. Whatever cash is paid off goes on the credit side. Clear? Received, debit side, paid, credit side. Clear? Now, it is always called the summary of the cash transactions. That means it is prepared at the end of the year. If we are going to prepare it at the end of the year, that is why it is called summary. Out of the whole lot of transactions entered throughout the 365 days, we sit at the year end, take down the cash book and record it. Rather, I should say prepare it. It never has a date column. There is no date column. So it is never recording the transaction on date-wise basis. Clear? So now, as I told, whatever is received will be put on the debit side, paid on the credit side. And it starts with the opening balance of cash in bank and ends with closing balance of cash in bank. If you just remember these small points, very basic points, you will be able to understand the basic format of this account. And in that case, you don't need to learn it. Most of the teachers, they push you to learn. They don't do that. Don't do that. Understand. Okay. You just understand the concept. It becomes easier to do. Okay. Now, we are moving to the format part. See this thing. It started with opening balance, ended with closing balance. These are the incomes, or I should say receipts. And see this. These receipts include what? All kinds of receipts, whether it is a revenue nature transaction or capital nature transaction. That means whether it is a routine income or non-routine income. Routine receipt or non-routine receipt. Clear? And if you see the expenses or the payments, capital payments, that is the capital nature transactions, and revenue nature transactions, all are included in there. Okay. Just take a look. All these items. Children, remember one thing. When you're watching the video, make sure you pause the slides. Take a good note of these. I want you to record all these in your registers or copies, so that when you are going to be revising all this at the time of your exam, it will be very handy for you. Undoubtedly, you'll find all these things in your books. But as a common students, we are very reluctant to go through the theory. Okay, so these points will help you to revise effectively. Okay, so now we move into a small example that how to prepare the receipt and payment account. Just take a look. Illustration is given where we need to prepare it for the year ended 31st March 2020. What is being given in the question to us? We have the opening and closing balance. Sorry, opening balance, not the closing balance, cash in bank. And then these are the receipts and payments. Subscriptions is received for the current year 30,000, previous year 2,000, next year 1,000. That means we receive in total how much? 30 plus 1 plus 2. That makes it 33,000. Current year 30, previous year 2, next year advance 1. Life membership fees is there, investments are purchased, donations are received, tournament fund is there, furniture is purchased, tournament expenses are there, salary is there, depreciation on machine, outstanding salaries and outstanding interest. This much is given. So now we move into the solution. So the thing is, receipts and payment side, as we see that we are starting with the opening balance of cash, that is 8,500, and then see all the receipts, simply put them on the debit side. Whatever amount is received, subscription was received for 3 years, previous, current and future, next year, this is it. All the incomes are there, and this side, credit side, you see all the payments made, and then you balance the account as we do with the ledger accounts. Balance CD, this is it. Okay, so that's it for today. Today you try to find out the related questions from your book. That can be TS or that can be DK, anything, or even NCRT, and try to go through the illustrations first. And in case of any queries, please reach me on Facebook, Insta, Telegram, or even WhatsApp, or you may even call me. You all have my numbers. Okay, that's it for today. In the next meeting, we will be discussing the incomes and expenditure account and preparation of balance sheet, and we will be going through a quick recap of the whole chapter. Okay, in case those who are watching the video for the first time, these are the 3 episodes you need to go through of the previous 3 topics that we have gone through so far. Take a note and visit it, and obviously in these tough times, stay healthy. Most importantly, if you'll stay healthy, you'll do better. Okay, and don't forget to like, share and subscribe the channel to keep motivating me to put in more and more videos. I'm taking a bit of time because in these stressful times, you need to be a bit cool and calm. Take it easy, keep doing. Gradually we will be speeding up the process. Okay, god bless you all. Bye.